Hello, hello. Happy Monday. Monday. Whoa, not Monday. Wednesday afternoon, wherever you're at. Let's talk through some growth stocks. So today at 7 p.m., once again, wow, 7 a.m. Eastern Standard Time, I sent out a new report, the Growth Leaders Report. We look through this specific report once per week, and we try to focus on finding stocks that hold both a technical and a fundamental strength to them, right? So what we like to do with this particular scan, if you will, this report, is we like to piggyback off of some of William O'Neill's principles of owning stocks that are showing great fundamentals, and then we add our own technical filters to them. The goal here is to find growth leaders. We want to identify those and buy them at breakout spots, particularly if they are within sectors and industry groups that we really like. We flip on over to TradingView really quick just to give you a general idea of what the market's doing here into the lunch session. SPY sitting at 526, down 0.59 on the day. And the Q's right now down 0.41, trading at 457. A little bit of a bond scare this morning. Talked about it briefly in the newsletter, and I do think this is a bigger deal than probably what most people are willing to admit. But when the bond market is going down, the equity market tends to go down as well. There's a positive correlation between the two. Bond auction data came out yesterday, and it was abysmal. We have back-to-back down days now in TLT of more than 1% to the downside. This will and is impacting the equity market. Just want to point that out before I get any questions about why is the market moving down so aggressively. Well, the market isn't moving down so aggressively, but bonds sure are, and I do think that will give the market an opportunity, an excuse, if you will, to sell off. So be ever aware of the bond market. Understand there is a positive correlation between bonds and the equity market. There has been for about 2 years now, and anytime bonds start to sell off like this, watch out for equity markets. As of right now, though, we have rallied intraday. I have no idea if we're going to stick that or not. That's not the focus right now of this particular stream. Let's talk about the Growth Leader Report here. So this is the report that we put out this morning, May 29th, 2024. And the first thing I want you to notice is how many repeat names you see on the list here. And I think that's an important thing to talk about. I like to start off every single session with this because I get emails about it occasionally. Well, we're looking at the same stocks week over week. And that's the point. We're looking for leaders within this particular space, this particular part of the market. And when we can identify those on a week over week basis, it gives us a little bit more conviction that maybe we should be owning these things. If there's a reason why they're on this list every week, particularly at the top of the list, because we are filtering them from percentage from 52-week highs, maybe we should be looking to own those. Now, the big name here obviously is NVIDIA. We do not own any NVIDIA as a community. We do own a plethora of semiconductors that are directly correlated to the moves on NVIDIA, but we're not interested in chasing this. If you did grab NVIDIA, congratulations. What an incredible trade. But this is just getting out of control here, trying to chase the NVIDIA trade. So we're going to focus today on a couple of other stocks that we've talked about over the last 2 weeks that are once again popping up on the Market Leaders Report, in this particular case, Growth Leaders Report. And if you're in any of them, shout out to you. I'd love to hear your comments on when you grabbed them and how you're managing them. Let's go ahead and start here. First things first stock I want to look at is ONON. Now, ONON came out about two or 3 weeks ago in the Up and Comers Report. It came out on the Growth Leaders Report. So there's some overlap here. Each report has its own idea, its own identity, what we're looking for in the market, because there's edge there and we want to own those particular parts of the market. It's incredible when we get the same stock that bleeds into different scans. It just shows how strong it is, and ONON is one of those stocks. We liked it off the 36.5 breakout pivot, and particularly we wanted to buy some sort of pullback, which we got the very next day. We were able to get long ONON and actually turn it free as of yesterday. So right now we have a free trade in ONON. Once again, this was a trade we opened up 2 or 3 weeks ago. It's not a new trade, but it continues to show leadership role, and so it's going to show up on the scans. And this is something that kind of the way we want to take these trades is playing out perfectly within ONON. It's not the fact that this might be the biggest win we've ever had, but it's the fact that we can manage risk almost immediately after taking the trade. We opened this thing and just a few days later, it was up and over 100%. So we're able to sell half of that and let the other half continue to ride up to the price target, which our first one here is 44.5, which we're very close to, right? Currently trading 42.26. Bullish momentum showing us that this is an incredible opportunity to own this stock. And it's not just ONON. Look at all of your footwear and apparel names. A name that just came up yesterday on our heavy hitters scan, or it wasn't heavy hitters scan. It was a different scan, was Crocs. Crocs is also breaking out footwear and apparel for whatever reason. There was also a stock on Future Leaders Report, I believe, last week. Started with a K. Can't remember the name off the top of my head. There's footwear and apparel names that are just breaking out right now. Once again, it's not up for us to decide why these footwear and apparel names are breaking out, but they are, as an industry group, ONON being one of those names, leading here in the Growth Leaders Report. The next name I want to point out, not a name that we own right now, but Abercrombie & Fitch. Once again, people are worried about the consumer. The consumer's dying. We're looking at like Nike and Lululemon and all of these big companies that were the face of the consumer for the last decade or more in Nike's case are all of a sudden down massively this year. And I totally understand some of the apprehension of wanting to own this stuff. But guys, not every apparel name, not every retail name is hurting this year. As a matter of fact, Abercrombie & Fitch has been a great example of a stock you needed to own at a price that you could justify based off the technicals. We had an original entry here off of the 48 breakout in 2023, and then an opportunity to add in here above the 137, 138 level, which we put out on the newsletter. This was part of one of the growth newsletters or growth reports that came out just a few weeks ago. And we talked about this inside of TTI as well, that if you wanted to add in above the 137, 140 area prior to earnings, obviously manage your risk into earnings, but this would have been a great opportunity to get into a stock that everybody wanted. It just so happens that everybody wants the stock until it starts to pull back, and then everybody's worried about it. Well, Abercrombie & Fitch is down a little bit. I don't know if I should own it now. Well, if you loved it at $69 and it's a primary uptrend, why would you not want to own it at the next consolidation phase? This is the difference between somebody that's trading technically and somebody that's trading based off of a whim, right? So stage theory tells us that these consolidation phases are great opportunities to add in. Abercrombie & Fitch post earnings, absolutely blowing everything out of the water. Remember, I get it. The consumer's dead. It's scary. Lululemon is down just an astronomical amount this year. I think it's like 40% or something like that, maybe more, 42%. And then you have Nike, which has just been abysmal as well. These stocks have just never come back. They're 2021 high. This is down 48%. But for every Nike and Lulu, there's going to be a name like Abercrombie & Fitch. Maybe ONON, maybe Crocs, like other names that are taking its place, right? So don't be afraid to own the uptrends, especially if they're showing up on these reports every single week. Another name I want to point out here that's on this list, First Solar. First Solar, for whatever reason, right? For whatever reason, this particular stock, it has some crossover between the solar industry groups and the semiconductor industry groups, and I love that. I love when you have a name that has exposure into two different industry groups, and both of those industry groups are showing relative strength. Now, TAN, which is your solar ETF, has not been the best performing ETF over the last few years. As a matter of fact, it's been pretty bad, along with Clean Energy, which is PBW. But in the short term, TAN started to turn around off of that April 19th low. As a matter of fact, we can look at it. TAN, you can see the April 19th low, and we've seen this kick up and over the 200-day moving average. This is the first time that solar has been up and over the 200-day moving average since April of 2023. I have no idea if this is going to stick into a new trend reversal or not, but what I like to see is that short-term trend reversal in solar, and then backed up obviously by the absolute performance in semiconductors, shooting for solar up and over the 240 area pivot or 230 area pivot and into all-time highs. Once again, this is a growth leader. It would be challenging to buy it here without